Hi, everybody. This is Gary Dean with Sentiment Timing, and this is our technical video report for Wednesday, January 22nd, 2025. So the Bulls are keeping this gap and go trade going right now. I personally think they're running a little low on steam. I wouldn't be surprised to see a 60 point, 50, 60 point pullback. It could turn into something a little bit more, but I'm not really seeing any major sell signals yet, and we're going off of a buy signal on the daily. So this move did enough to actually provide this. It went up already 300 points, but this is why I'm showing you this chart here is I'm anybody that's been following me for a while. One kind of knack that I have is picking up on fractal patterns. So the fractal patterns are basically something that happened in the past that's mimicking now and what you anticipate to be the future to be. So this you can see from here, we had a gap up, and then we started getting just right up here with no gap ups. But this was from the bottom to the top, and then this is the time distance. So I simply copied that and pasted it, and if we look, we're pretty much right on scale with it. So price-wise, we're exactly there. Where time-wise, we're basically there. And from here, we saw the S&P drop all the way down to the 58.49, and it topped at 60.16. So it was a little bit over a 100-point drop, and that makes sense. I wouldn't be surprised to see a move come down somewhere into the 6,000 level, possibly even coming down to the 59.64. But most likely we're going to get another push higher. It just really, I mean, just from what I'm seeing, I'm not married to either side on it. Tomorrow, I'm definitely leaning more on the downside, and really my downside, I mean, I'm not married. We could obviously do anything tomorrow, but from what I'm seeing here with the 60-minute chart, where we have these bearish divergences, very, very overbought, gap. So basically, they gap their way up here. And if we're just going to get a push back down to, say, this support right here, it was resistance, it was support, and then it was resistance. So that brings us down to this 50 area. This makes sense to get a pushback here. What makes more sense is that we actually come down and test the 60.24, or come even down and testing the 59.76, 59.37. So I have a market neutral trade going into tomorrow, and I'm leaning more on the downside with this. But basically, if it pops higher, I'm covered that way because I have the calls. I'm hoping, and just from the things that I'm seeing, that if they end up gapping it higher, if they gap it, if they can do it 20 or 30 points, that's fine. I'm just going to sell the call side of it, and just wait to look for where to start selling call premium. But I got when we were trading right around here, I'd gotten the 6100 call, 59.95. I'm sorry, 60.95 put on it. So I'm in the money, almost 10 points on that. But from here, like I said, if it comes down to any of these levels, it's going to be a decent trade. Now, did I put that into the room? No. We can wake up and be down a lot of money. I don't believe we're at that stage. I mean, I got pretty much everything covered with this, where if we end up staying where we are, we don't move, I will definitely take a little bit of a hit, but it won't be anything drastic. If it moves in the right direction that I'm anticipating, or it moves big, I'll do very well with it. But this is, because of these bearish divergences, because of this fractal pattern, I'm looking for a minimum of a pullback down somewhere into the 60-50 level. And if it get below that, I'd really like to see it come down to the 60.24, which is a 23% retracement, which really is not that much when you look at over a 300-point rally. So from there, if what really I think I would be more comfortable jumping on this bull wagon would be, if we test someplace down at these levels, and it would really be for a test back up to these highs. But right now, can this go higher? Absolutely, we've seen it. As far as yes, the economy, people are a lot more bullish than they were on the economy than the last 4 years, to put it bluntly. But the thing is that there's still, we have interest rates there. Yes, they're dropping some, but they're still elevated. So it's not going to be that the ZERP type trade, zero interest rates, where people are just getting free money and just putting it into the market. So those days are over. I think a lot of people are hoping for them. They've been pushing for certain things, but right now, I don't think it's going to be any kind of straight line. I do believe we're going to have some big, ups and downs, and then from there we just traded on a day-to-day basis. So again, seeing this gap closed, I think would be healthy for the market. That's right around that 60-50. Pulling back a little bit more down, somewhere into the 6,000 level or the 59.90 would make even more sense, and it would give me, I'd be definitely interested in buying here as long as support held. So we have the sell signals. We look at the 15-minute chart. We do have some sell signals again, but not as much. It's more of a sell signal on the RSI, and we're a little oversold here. So if we open down again, you can see we have support. Well, the support is the moving average 60-64, but below that we're coming down and we're looking to close this gap somewhere around that 60-50 level. So that's it. And then obviously we already know on the upside, they get the bulls need to get it above the 61.02. If they do that, you can really just go in 10, increments. So 60-10, 60-20. It's tough to say because there's no, there's really no pattern or extension that I could put on this because there's been no real moves lower. The closest thing that I can come to, and I'll actually do it on this chart here, would be if I was going to be forced to take a guess as far as where it, if we didn't top and where we're going to, one would be this ABC move, and that would bring us somewhere up into the 60-78. But before we get there, again, I still think it's not gonna be a straight up move. We're gonna come down, do some backing and filling, and then head up there. Try to lure in some more shorts or more bears to use them as squeeze fuel on it. But right now, I'm leaning definitely a little bit more on the downside right now than I've been. Over the past week or so, because I've said, don't be too quick to short this rally, and really the main reason was I had to buy signals on the daily chart, and you don't really want to go against that kind of stuff, man. You'll get whipped. So what did the fund do? We lost a little bit today, down 1,600. Took a skim on the knee. It was a directional trade that it went. If I would have held it, it would have done. I would have not have lost 1,600. I think it would have been. I would have made a few hundred, but I didn't really feel like turning a bad entry into something worse. So I just took my licks and stepped aside, and then took that trade towards the end of the day to see if we're going to get, if it's either going to be a gap up or gap down. Makes no difference to me. I'm leaning a little bit more on the gap down side just because of the sell signals, but I'm easy either way. So with that, have a great night, and I'll talk to you guys in the